You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, let's unpack this. Welcome to the deep dive.
Glad to be here.
We're your shortcut to getting really well informed. Today, we're not just, skimming the surface.
No, we're going deep.
Exactly, a deep dive into a crucial stack of insights.
Mm-hmm.
We're pulling out the global trends shaping, everything from your finances to geopolitics, our mission, cut through all the noise, give you the knowledge that actually matters so you really get what's happening.
Right.
We're talking Washington clashes, big ones, international trade moves, currencies and commodities doing their roller coaster thing. And of course, those hot spots, the Middle East, Ukraine. It's a lot.
It is. But what's fascinating, I think, is how it's all connected.
That's the key, isn't it?
Yeah.
And we're going to try and make sense of it all together.
Exactly. It's easy to see these things in isolation, right? A policy debate here, a conflict over there.
Yeah.
But the real deep dive, it shows how these threads, they're tightly woven. They send ripples everywhere, through markets, through politics. So what we want to help you see is not just what's happening, but like the forces underneath.
The why.
The why, precisely. And what it could mean for you, your money, the whole global picture. It's about getting that clarity.
Connecting the dots.
Connecting those dots, yeah. Seeing the whole dynamic thing unfold.
Absolutely. That interconnectedness, it's vital. And speaking of domestic forces with big ripples, the Federal Reserve.
Oh, yeah. That's a big one right now.
We're seeing some honestly unprecedented moves being discussed, things that could really change its role.
Definitely.
This political clash between Washington and the Fed, it's dominating the headlines. And it's more than just bickering. It's creating real tension.
For sure.
Reports are saying President Trump is weighing a swift nomination to replace Fed Governor Lisa Cook.
Names like Stephen Marin, David Malpass being mentioned.
Right. But here's where it gets, really interesting, I think. The administration is also reportedly exploring ways to get more influence over the Fed's regional banks, the 12 of them.
Wow. Okay. So not just the board in D.C.
Exactly. This isn't just one appointment. It's potentially expanding political reach deep into the Fed's actual structure.
That does raise a really important question, doesn't it?
It does.
We're talking about the independence of the Federal Reserve, that whole principle.
Which has always been seen as kind of the bedrock.
Right. For stable monetary policy, for economic confidence, keeping it free from short-term political wins.
And Governor Cook.
Well, she's made it very clear she'll challenge any move like that in court.
Setting up a potential major legal battle.
Could be historic, yeah. And the implications, they're huge. It's not just, separation of powers stuff.
No.
It hits the perception of how monetary policy gets made. If markets start thinking Fed decisions are political, not economic.
Then confidence erodes.
Exactly. You could see serious uncertainty, volatility. That affects everything. Borrowing costs, your savings, the lot. It's a really delicate balance.
Any perceived tilt could have huge consequences. It makes you really think about the long-term effects, especially given how important the Fed's credibility is globally. And while Washington's dealing with its own economic livers, these things, they don't happen in a vacuum, do they?
Not at all. They ripple outwards.
Which brings us to international trade. A very delicate dance right now.
Always complex.
We're seeing both, sort of, positive engagement and friction points happening at the same time.
That's pretty typical, actually.
On the plus side, Japan's chief negotiator is expected in Washington this week.
Okay.
Talking about fresh Japanese investment into the U.S., that seems like a clear positive signal, right? Partnership, mutual benefit.
Yeah. Always good to see investment flowing.
But
yeah, the landscape isn't totally smooth. Spain, for instance.
The digital services tax.
Right. They've reiterated it applies equally to all large firms, doesn't matter where they're from.
Which is a direct response to U.S. criticism that these taxes target American tech companies.
Exactly. Spain frames it as sovereignty. We tax who we want in our country. Sure, but the underlying thing here is this growing fragmentation of, the global tax system, especially digital taxes.
Meaning more complexity for companies.
Definitely. For multinationals, it means higher compliance costs, maybe getting taxed twice on the same income.
Which could discourage investment over time.
Potentially, yeah. Discourage cross-border investment, maybe slow down innovation. We're kind of seeing national digital economies getting fenced off a bit.
That has real effects on global efficiency, future tech.
It does. It's a subtle shift, but significant.
And connecting this broader picture, it's not always about direct taxes or tariffs, is it? Sometimes economic forces create totally unexpected pressures.
Like the EU aluminium situation?
Exactly. They're preparing emergency measures to help their aluminium industry.
Right.
And it's not a trade war, it's this weird, fascinating ripple effect.
Tell us more.
What's happening is EU recycling plants are actually facing shutdowns because U.S. buyers are demanding so much European scrap metal.
So U.S. demand is pulling scrap away from European recyclers.
Precisely. So U.S. demand for materials is inadvertently creating supply chain problems, potentially hurting a whole industry in Europe.
That's a fascinating example of interconnectedness. Shows how complex these flows are.
It really does.
So these different examples in investment talks, tax fights, these unexpected supply chain kinks, they all reflect these bigger trends, global competition, these pressures of protectionism, sometimes subtle, sometimes not.
Makes you think, how do these individual issues play into that bigger landscape?
Exactly. It forces you to consider that. It's not just tariffs. It's capital flows, resource battles, countries asserting their economic interests.
A good reminder that even small shifts can have big consequences globally.
Absolutely. Potent reminders.
Which brings us neatly to decoding global markets. Let's start with currencies. They're like that real-time report card you mentioned.
They really are very sensitive barometers.
The dollar. Well, it dipped a bit earlier in the week on those Fed governance worries we talked about.
Right, that uncertainty hit it briefly.
But now it's regaining strength, showing that resilience, maybe that safe haven appeal.
Yeah, the dollar often does that when uncertainty arises elsewhere.
And elsewhere. You look at the euro. It's under quite a bit of pressure.
Political uncertainty in France is a factor. Upcoming elections, policy worries.
And also weaker German consumer sentiment data, right?
Yes, weaker than expected. German consumers pulling back. That's significant for the whole Eurozone.
So these movements, they tell a story about capital flow.
Absolutely. When the euro weakens like that, it suggests capital is moving out, or at least not flowing in as much. Investors are weighing the risks.
Which affects import costs, business attractiveness.
All of that. Meanwhile, across the channel, sterling's still soft.
Only getting a little bit of a cushion from the euro being weak itself.
Exactly. Shows its own vulnerabilities. And the yen, still hovering just under that 148 level against the dollar.
Which is a key level, isn't it?
Very key. Historically, breaking past 148 has sometimes triggered Bank of Japan intervention to prop up the yen. So traders, policymakers, they watch it like hawks.
Keenly watched thresholds indeed. And here's a little detail that just shows the volatility perfectly.
Oh, yeah.
The Australian dollar. It actually spiked briefly.
On what?
Hotter inflation numbers, strong construction data. Looked like a robust domestic picture.
Okay, so it surged.
But then it retreated almost immediately. Couldn't hold the gains.
Classic volatility. Shows how quickly sentiment can turn.
It's like that global popularity contest you mentioned. 1 minute you're up, the next, not so much. Fleeting rallies.
Precisely. And what's fascinating is how directly political uncertainty, economic data, those Fed debates, how they translate immediately into currency moves.
Real-time recalibration of risk.
Constantly. And these shifts, they're not just numbers. They hit purchasing power,
Yeah.
especially for essentials like commodities.
Which brings us there. Let's talk commodities, starting with energy.
Okay.
Oil prices have softened up a bit recently.
We've seen that drift lower.
Yeah, and you've got President Trump saying he expects crude below $60 a barrel.
And Goldman Sachs has a projection out too, right?
They do. Projecting Brent crude could slide into the low $50 by late 2026.
That's quite a bearish outlook.
It is. And adding to that, the latest U.S. inventory data showed a smaller than expected draw in crude stocks.
Meaning less demand from refineries than anticipated.
Right. Suggests maybe a slowdown in energy consumption? Hints of broader economic cooling, perhaps?
It can signal that, yeah, lower oil projections often mean expectations of slower economic activity ahead, which is, a double-edged sword.
Good for drivers. Maybe worrying for global growth.
Exactly. Now, interesting counterpoint. Despite the dollar strengthening, which usually pushes commodities down.
Because they cost more in other currency.
Right. Despite that, gold is holding pretty steady, near that $3,375 an ounce level.
Showing some resilience then.
Distinct resilience, I'd say, suggests that even with the strong dollar, gold's still attractive as a safe haven amid all this uncertainty we're seeing.
People seeking safety.
Seems like it. Elsewhere, copper, other base metals, they're kind of drifting lower. Range-bound trade, mostly.
What does range-bound tell us?
It means they're not making big moves up or down. Stuck in a channel, basically. Suggests the market's waiting for a clearer signal.
Lack of strong conviction either way.
Yeah. Waiting on global growth news, supply signals, rather than betting on big, immediate shifts.
So, a real mixed bag in commodities. Reflects that uncertainty everywhere else.
Perfectly.
Okay, let's shift focus now. Geopolitical flashpoints. Always simmering, always critical. Starting with the Middle East.
Still very tense, very complex.
On the diplomatic front, there's some movement. U.S. Special Envoy Witkoff says multiple nations are negotiating entry into peace accords with Israel.
That's potentially significant. Broadening those accords could really reshape the region's politics, maybe foster new economic links.
Hopeful pathways, perhaps? And at a high level, President Trump is chairing a White House meeting on Gaza.
Underscores the ongoing focus on that conflict, trying to find a resolution.
But there are serious concerns, too. Talks with Iran are ongoing.
But Tehran's issued warnings about the snapback mechanism in the nuclear deal.
Can you just remind us what snapback means here?
Sure. It's basically a clause allowing UN sanctions to be automatically reimposed if Iran is found not complying with its nuclear commitments.
So, Tehran warning about that. It's not just talk. It has real teeth, potential economic consequences.
Oh, definitely. For oil markets, international banking, it highlights just how fragile that nuclear agreement is.
And on an even more serious note, the head of the IAEA, the nuclear watchdog.
Reportedly receiving heightened security, following threats directly from Tehran.
Wow. That's a great development. Signals really escalation tensions.
It does. Shows how seriously any potential breach of nuclear protocols is viewed globally.
It really underscores that intricate balance you mentioned. Diplomacy, security, nuclear deals.
All in a very volatile region. It's a constant tightrope walk.
Any misstep could have wide-reaching effects. Stability, energy markets.
Huge stakes.
Absolutely. Now, moving to another critical flashpoint. Ukraine. Negotiations seem strained.
That's the sense, yes.
U.S. Envoy Witkoff did confirm he's meeting Ukrainian representatives in New York, so diplomatic lines are open at some level.
Which is always better than them being closed.
True. But we're getting conflicting signals, aren't we?
We are. President Zelensky says Russia is sending negative signals about future talks. Suggests, a lack of constructive engagement at certain levels.
And Moscow's response.
Moscow noted no agreement has been reached to upgrade the level of negotiating teams.
Meaning high-level progress is still stuck.
Seems elusive for now, yeah. Communication might be happening, but the political will for a real breakthrough, maybe not there yet, leading to this prolonged grinding conflict.
So if we connect this back to the bigger picture, these geopolitical developments, Middle East, Ukraine, they're not just news stories.
Far from it.
They directly feed into global stability, market confidence.
Yeah.
Even the price of oil and the value of the euro we just talked about.
They're powerful forces shaping the whole global landscape.
Makes you really think, doesn't it? How these events, which might seem far away, actually contribute to the environment we're all navigating.
Right. Impacting decisions in boardrooms and governments everywhere.
It's like that old saying.
The threat is stronger than the execution.
Exactly. These threats around sanctions, security, even without full conflict, they create massive uncertainty. Businesses, nations have to plan for all sorts of scenarios.
Constant contingency planning.
So wrapping this up, what does this all mean for you, listening?
Yeah, the takeaway.
We've journeyed through that complex dance. Domestic policy hitting global markets, the strange ripples in international trade, those ever-present geopolitical risks.
It's been quite the tour.
Hopefully you now feel equipped with a sharper understanding, cutting through the noise to see what's really driving things right now.
And what's truly fascinating, I find, is that constant tension between economic logic and political volatility.
And how fast the balance can shift.
So fast. We saw how Fed independence debates hit currencies, how U.S. demand forces emergency action in Europe's aluminium sector, how fragile talks in the Middle East or Ukraine echo globally.
All interconnected.
Deeply. So here's a final thought to mull over. Consider those pressures on the Fed, the EU's aluminium issue driven by U.S. demand, the delicate state of global talks.
Okay.
How might these seemingly separate things actually converge? Could they reshape what economic independence even means in the coming months?
Interesting question.
What could that imply for your own economic future as nations try to navigate this world where really everything seems globally interdependent, whether we like it or not?
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.